Hello, retake, November 23rd, 2020, stocks of the week. We are adding 4 stocks to our watch list, and I want to focus on the investment philosophy first. We only want to own stocks because of the single stock risk. If we really think that those stocks are going to crush the market. So with a growth stock, we're looking for triples in the 3, 4, 5-year time frame. And with dividend stocks, we are looking to have the appreciation be as good as the market and then have the dividend on top. And hopefully we get appreciation that's more. The 2 stocks I'm going to show you today, I both think can beat the market outright and have their fat dividend on top. And then the growth stocks, I both think could be somewhere between 5 and 10 bankers. So let's take a look at that real quick. But remember this, and remember to read the investment philosophy. I really want you to wrap your head around things like asset allocation, driving your returns, and why we are very, very selective on single stocks. We know that about 90% of the stocks out there don't really beat the market in any appreciable way. And we know that the gains in the stock market are driven by about 10% of the stocks. So we want to focus on finding that 10% of the stocks. And if we end up a little bit out of that range, we still are going to do pretty good. But if we really just try to get the best of the best, the ones that can close big value gaps or have excess growth, or they have some sort of asset that's mispriced by the market, and we can get that top 10% growth once in a while. And even if we don't get 10% growth, we're way on the good side of the top half. Our bad ones will still be pretty good. So that's why you never settle for a pretty good stock, because a pretty good stock could turn pretty bad pretty quick. So if you always shoot for the top and you underperform a little bit, it's still better than what most people are doing, and probably not any worse than your ETFs will do. Now, if you're in the right asset allocation, right, the right sectors, if you're on the barbell that we have put up a million times, if you're on the investment barbell, those will generally beat the market on their own. So stay with the investment barbell, stay with the very best ideas, focus on ETFs to get started, and then add the stocks that you think probably within those ETFs that you own that you want to overweight. Growth stocks that I'm adding this week, Sirius Satellite. Last week I hinted at it. I said Howard Stern likes one of our companies. Presumably he doesn't quit next week because his contract is up. But here's what people are missing with Sirius Satellite. With all of the new car technology, most new cars have Sirius Satellite built in. Now, you have to activate it in many cases, but in a lot of cases, they're just giving you that first free month. And they're hoping that in that month of you riding around in the car with Sirius Satellite, you're going to love it and then pay the $5 a month. I'll tell you what, in the last year, I've had Sirius Satellite, and it's awesome. They bought Pandora. There's all kinds of music. You have customized stations. You have sports. You have talk radio. You have comedy. You have anything you want. But wait, there's more. Not only is it going into more and more cars, which should triple to quadruple their revenue in the next few years, but now it's an app, right? Pandora had an app. They've adopted that technology. Now you can get it over your cell phone or with your Amazon Fire Stick or on Roku. I have it on my Roku now. And I'll tell you what, I think the Sirius Satellite could be a 400, 500, 600% stock in the next several years, because what's going to happen is they're going to start beating their numbers pretty consistently, and people are going to take notice. So here's the chart. I know it's a little bit hard to see, so you have to go to the article I just published on margin of safety, and I'll flip this up on fundamental trends here when we're done with the call. It just busted out of what I would consider its buy zone, so I would buy it on the next dip. It's got huge support right in here, and you're going to want to not be too patient with this one. It's probably not getting back down here again. If it gets in here, it's going to be on market weakness, and that's probably when I would take my second position. But I do think I want to buy some of it around 650, somewhere in the 6s, and I think you're going to be fine with somewhere in the 6s. Closer to 6 is better, but you might not get it. So I wouldn't get too fussy on something that I think is probably headed all the way up here easily to 10-ish. And then I think it probably, it could be a rocket ship stock. I mean, it really could go to 20s, 30s, 40s over the next few years. especially with what we heard about Janet Yellen being the Treasury Secretary. She's just going to bring stimulus in so many ways, same way she did as Fed Chairman, that I'm not too worried about the intermediate and long term anymore. But I really do still think we have a kick in the teeth coming. But whenever this kick in the teeth comes, we're going to want to be big time buyers. In the meantime, some of these stocks, at least you get your starter positions. Sirius is probably going to be on the plug and play next quarter. And I think MP Materials will be too. MP Materials is the skeleton of Molycorp, and they're going to end up having a monopoly on rare earth metals processing in the United States. Right now, their mine sends the rare earth metals to China. It gets processed and then it gets sent back. Well, they're going to get the processing facility up and running, and that should be in the next year or so. And then they're going to have a monopoly for years and years on rare earth metals in the United States. So Molycorp was a darling a long time ago, and they just blew it up. They didn't manage it well. They took on too much debt. Now this company is in really good shape financially. They're trading at under $1 billion market cap. There's no way this stock shouldn't end up on the S&P 500 at some point, right? Somebody else is going to open up a mine, even if it's not theirs, and they're going to be the ones that process it. And there's big margins in that. So these are the metals that go in the phones and communications technology and defense technology and things like that. So I really think this one's a potential 10-bagger, even from the $16 that it's at now. If you can buy it on a little pullback, go ahead. I took a starter position back when I mentioned it when it was FVAC at like 1150. But I'm going to add to it probably on any down day, which, who knows when we get a down day again. We might not get a down day again this century. Who knows? But, I do think this is a buy the dip stocks because I think the upside is way over 100. I really do, way over 100. And do your research on this. Don't just take my word for it. I want you to go to these companies' websites and read, right? Before you put your money in there, read their investor presentation, soak in the background, and then say, okay, I've read the investor presentation. Now I'm going to read the 10Q, 10K. I don't even know if they have a 10Q yet. They just have a 10K. Sirius has all that stuff. And they're a Liberty-owned company, by the way, Siri. And Liberty's made a lot of people a lot of money. So make sure before you put your dollar in, go spend some time reading this and understand what these industries are. This is a huge growth space. I think that almost everybody's going to have satellite radio someday. It's that good. I don't know what the future is for terrestrial radio. I really, truly don't. I think the AM band might go away. It would make sense that they use that for other things. And that's been talked about, right? That's not something I make up. That's something that's been talked about. MP Materials, we need these metals. And if they're going to have a monopoly, we like oligopolies, but we like monopolies even better. So 2 dividend stocks. I'm going to give you 2 of the REITs that I've been looking at because I think they're basically ready to be bought. Essential Properties, small cap REIT. Triple net REIT, right? Triple net lease REIT. So they have very low expenses. It's very easy for them to flip tenants if they need to, but their rents are already back to 90% paid. So their tenant base is very, very good. Go to their website. You'll see who's renting their properties. You'll say, wow, these guys are pretty good. But the kicker, right? Don't just buy into they got good tenants. Yay. Well, yeah, there's a lot of REITs that have good tenants, right? And they all try to say, our tenants are the best. Oh, no, our tenants are the best. No, the tenants are good, right? They're good. However, these guys have very low leverage, right? To the industry, they're very low leverage, and they have access to a lot of capital. I wouldn't be surprised to see them issue more shares and dilute. However, that's going to be to buy somebody else's thing that they need to sell to stay in business. I think where they're going to really make money is preying on the pain of others. I really think they're going to grow and expand from a $2 billion company to a lot bigger. I think that these guys could end up on the S&P 500 too. I think this is a potential 3, 4, 5, 6, 7, 8 bagger. And it's a freaking REIT. Why? Because I just think that they can gobble up a lot of things that are out there, drop drop the rents, to the FFO and pay out bigger dividends, and that'll attract more people. And as they grow and people start to go, oh, look, these guys are $10 billion now, then they're going to get on the S&P 500, and then they get that pop too. You saw Tesla today, it's up 6%. You know why? They sold a car. They did. They're on the S&P 500 and they sold a car. So Tesla's market value went up the equivalent today of a Ford. What? Yeah, Tesla went up today as much as Ford is valued up at. A lot of things don't make sense. But in a world where things don't make sense, we might as well have something that's in a really good financial position to gobble up real estate assets that we know are going to be valuable long term. They fluctuate, but if they can buy because of other companies paying, hey, let's jump on board with them. So here's their chart. Look where they were. They're up around 30. Now they're down around 20. And they've come off the bottom. And I wish, this is, of the REITs I've been studying, this is the one that I wish I probably would have bought. Because this is the one that makes the most sense to me as a growth story that also pays out like a 4.5% dividend. Right? So you get a growth stock with a 4.5% dividend, and they own hard assets. It's hard not to like this one. Ertstat Biddle Properties. What's funny is I just kind of bumped into these guys a long time ago, studying them. And then one time I was in New York and I was in the northern burbs, and I went to one of these places and I was like, I wonder who owns this mall. And I stood there and I figured it out. And it was these guys. And we had to go to a grocery store. That's why. And a lot of their malls, strip malls, are in the New York suburbs. Sorry, I was reading somebody's quote. I'm not sure why he said it. And this is where people are gravitating towards, right? So we know, and remember a year ago, before the pandemic, I said when I got back from the East Coast last August, and I think it was maybe the first show in September, I said, I don't know why a million people don't move out of New York tomorrow or yesterday, because there's just too many damn people in New York. And I think a lot of those people are, and I think that's why you're seeing the lowest rental rates in New York in a long time in the city. People are moving out to the burbs and saying, look, my boss says I only have to come into the office once or twice a week. We're seeing more and more announcements. PayPal just announced today that they expect their people to split time between home and various regional offices now. So you're getting a lot of people, filling in some of those gaps in the New York burbs, and they're going to need places to go and shop. Most of these, not most, but a lot of their malls are anchored by grocery stores. It might be most. I'll double check that. And they have a pretty fat dividend. What I really like here, though, is that it fell off a cliff as a company that really has a lot of essential businesses, and, those grocery stores in particular. And it fell off the cliff. It started to rebound because everything started to rebound. Had the correction in June, and it just kept dribbling down. And most of the other REIT guys picked up on this, and I should have picked up on it a little earlier. This jump right here doesn't make sense that it happened that fast, but it does it makes sense that it happens eventually and it gets back up in here into the middle 20s. So I think this is another one where you buy the pullback. You see that there's pretty good support here. This is where there's big buying pressure that popped up the price. So as the price comes back down to this area, I think those buyers are gone. So it might even get back down in here. But somewhere in here, take your starter position if you're a dividend investor. And I think this is one that you hold it until it basically doubles, and then you probably get rid of it. So I don't think that UBA is a forever stock, but I think it's a until it double or triple stock, and then and you collect your dividend in the meantime, and then you get rid of it at some point when you can replace it with something better. So this will be something that you'll upgrade at some point. But I think that right now, if you're looking for a dividend stock that doesn't have a ton of downside, they got a pretty good balance sheet, and they're in a place that I think is going to do well. And then the grocery stores, right? I think people are going to cook dinner more often now. Weird, right? I mean, we're cooking dinner at home 5 or 6 times a week now. That's nuts. We order out here and there. So I think that you could take a look at this one. If you want the bigger growth, I think that this one does better longer term, but I think that these guys are pretty rock solid. So you want to buy the dips on those. but it has gotten bid up by some of the, real estate zealot investors, the people that just buy REITs. I think that that's going to let it come back a little bit. So let it come back, right? These blue and orange bars are the volume, and it indicates the buying and selling pressure. So if the yellow is bigger, it means there's more selling. If the blue is bigger, it means there's more buying. They don't always balance, right, because of leverage and things like that. People taking the bid and the market makers being involved. So, when you get down here and you see the blue line is bigger than the yellow line by a couple percent, that means that you really were getting a lot of buyers. And when the yellow line is bigger than the blue line, that means that, you had a lot of people that wanted to dump it. So in here, right, there's a lot of buyers in here around $10 a share. I have a hard time believing it gets back down to $10 a share, but it's really not that far away. I mean, it's $3-4. It could go back down here and bounce off. So if it got down to right about here, this line is a 786 line. There's a lot of structural support in here. If it got down to, 1159 is what that says, but, round up so that you don't miss things. $12 at $12, I think I would jump all over this. But I don't think you hurt yourself if you buy it now and take a starter position. Even if it goes down on it, you can buy more and then let it zig and zag back up. Do your, if you want to call it Elliott waves, call it Elliott waves. I don't care. I don't think Elliott waves add any value. We just know that stock zigzag, right? And then you have to go along with its broader psychology. All right, let's do a couple of questions and answers. I want to talk quickly about the oil stocks that I got my ass kicked on. So I put a couple of trades on. The first trade I did with XOP, I made money on. The second trade, I started to make money, and I took some of my profits on a Friday, and then the next Monday it went straight up like 17% or something. So my remaining position is junk. I'm trying to salvage some of that. I will say, if you take a look at this on the weekly chart, it's starting to get overbought. Not quite, but look at the daily chart. The daily chart's super overbought. So I think you're going to get a little dip here. I don't know if it dips and then it continues back up, or if it dips and then it just keeps going down. I think you get the dip, and that's how you clean up your XOP puts and just take out what you can. And I think that happens this week because, like I said, the daily is way overbought. So on the next dip here, clean up your XOP positions, especially your Decembers, take what you can. But I'm probably even taking my Januaries because I can't trust what OPEC is doing. Now, the day before the meeting, I might buy some puts, and the meeting's like January 5th or 6th or something. And they're going to decide whether or not they want to extend the cuts. Now, here's the logic for extending the cuts. It'll help push the price of oil up. And on one hand, they want that. But here's the other thing. If the price of oil doesn't go down one more time, then these shale guys aren't going to finish up with their bankruptcies and consolidations. They're going to hang on, and they're going to try to claim, well, look, oil's back. The smart thing for OPEC to do is to crush shale right now, is to say, look, we're not going to extend the cuts. We're going to add a couple million barrels a day, and we're going to let everybody out there, maybe Saudi Arabia doesn't, but everybody else does. So Saudi Arabia would maintain the cushion, and everybody else, they'd let drill baby drill. That's what they should do, because it would wipe out, most of what's left of the oil shale sector, except for half a dozen companies or so. It would force some mergers, it would force some bankruptcies. It would make Exxon and Chevron not expand their potential drilling and even pull back. That's what OPEC should do. They should put the screws to shale, because OPEC's got the cheapest oil. So they should put the screws to shale, push the price of oil down, which is good for the economic recovery, and just basically tell shale, look, you get to play when you can make money. No borrowing, no screwing up the market. Just be there for when we actually need oil. And, because you can get online in 3 months, go ahead. I don't know if they'll do what makes sense. Maybe they're just thinking, well, demand's going to come back. But by now, even OPEC is saying that demand's not going to come back. So, OPEC's projection is that oil demand won't be back to 2019 levels till 2023, I believe is what they're saying. And a lot of other people are saying 2024. I actually think it probably will be 2023 because I think people are jonesing. But regardless, it peaks. That's going to be the peak. It's going to be a double peak because the EVs are hitting so hard. Everybody's raising their projections on EV penetration from 10% to 15%, and I actually think it's going to be 20 to 30% by 2025. So, let's keep this in mind. Plus, remember, Joe Biden is going to be the president, and that means that much tougher EPA regulations. So I think that if you haven't lost money with me in here, you could probably make money by shorting XOP. And remember, small positions, 1% positions, things like that, 2% positions. I went a little bit bigger because I thought I was super right when it got up to here, and I was wrong, a week later. But I think that this is a pretty good trade. And you have to maintain these daily, right? Your swing trades, you got to maintain daily. You can't look at these once a week. You got to look at them 3 times a day, like we've talked about. All right, so that's enough of that. Let's take some questions. What stocks do you really want to talk about? What's the symbol for Weyerhaeuser? So I was just in the lumberyard today. I think that if you really wanted this stock, A, you should have been watching it before, and B, you should have bought it here. I've talked about Timbers holdings a number of times over the years. And when they crash, they're another thing that usually does pretty well after a rebound. I don't think that they have a lot of upside here. Right? I mean, look at the structural nature of this. Could they get back up here over a couple of years? Yeah, I guess. What do I care about a move from 29 to 36? Isn't that a hard move? What's the real, and this, I want to pound this into your heads. What's the real big upside here? What's going to make Weyerhaeuser double or triple in the next couple of years? I can't think of a story. There's nothing special about it. It's wood. It's cyclical at a certain degree, but there's nothing that really drives the business. It's not like Sirius where they're going to triple or quadruple their revenues, right? They're not going to start buying other people's strip malls because they're going bankrupt, right? They're not going to be a monopoly producer of rare earth metals. Everybody wants to ask about gold. All the oil stocks are in the same basket as XOP, by the way. So this has come back like we said it would, under 36, and it's almost right on top of our optimal buy zone. So if you can get it in the low 30s or you could probably sell puts on it right now. Go ahead and do that. With Janet Yellen as Treasury Secretary, does anybody think that gold's not going to rise again? Should we take a look at what gold did under? So gold finished its downturn and then jumped up. Then Powell came in, and then it finally came up. I don't think she had a goddamn thing to do with it. Let's look at it. Take a look at gold. When did gold turn around? That was probably, there we go. This is a good chart to superimpose with Yellen, huh? So the bear market in gold ended with Yellen, and the bull market began shortly thereafter. Meh. I think it just comes down to who's printing the money. Maybe she doesn't matter. But one thing about Yellen that's interesting is, you remember when she said in that one press conference about 401k balances are going up, so it's not that bad if they're printing money? Again, they're not really printing money. They're borrowing money from the future with the expectation that somebody else has to pay it off and monetize it probably. So I still expect big helicopter money eventually one day. And that's why I think that the gold stocks, which are increasing their dividends because their revenues keep going up, is probably the place to be. Do I think that I'm ready to jump back into the gold? Not so much. Maybe, I don't know. I think the gold stocks do way better, right? They have the stream of earnings. They kick out the dividends. You've got the two great plays. You got Barrick Gold, which is foreign. Then you got Newmont, which is in the S&P 500. You buy Barrick right now probably, but Newmont, you can wait for the S&P 500 to come down and then buy it. It did dip under 60 today though, right? Newmont is under 60 today. Yeah, 58. Getting close. This is all the people who don't want to lose money, right? So they're selling. So all these people who need to lock in their gains, and then you'll start to get buying again, right? You start to get buying again in here. Now this, I mean, if we had a catastrophe, I might make Newmont Mining my only holding if it gets down to 30 in the 30s again. That's not a joke. I can't really do that with other people's money, but if it gets down in here again in the 30s, back up the truck, take out a second mortgage. And Barrick I like because I think that Canadian dollar is going to do all right. But the same thing is true here. See, the selling ended up in here. Now the buying is going to start again. So you're in the buy zone for Barrick Gold. Right? Why is this selling pressure? Because people who bought it down here wanted to lock in their profits. Fewer and fewer sellers, right? See how that line goes? And then when it comes back out, these are people buying back in. I don't think this gets under 20. Again, if it does, you just got to back up the truck if it gets under 20. But these guys just increased their dividend. They're just rolling in money. It doesn't matter too much if the price of gold is $1,900 or $1,700. That's still way more than $1,100. So yeah, they're dropping a lot of money to the bottom line at Barrick and at Newmont and most of the miners, right? The speculative miners aren't really the ones that you want right now. You want the guys that are just producing a whole bunch of gold. The speculative miners here and there you're going to want. Oh, I don't even remember their name right now because I didn't look at it for a week. But there are companies that have mines, speculative mines, right next to where the big guys mine. So if they find gold a mile away, that's when a Newmont or a Barrick or a Kirkland or somebody maybe comes in and buys them. Somebody asked about the junior miners. You got to pick those out one at a time. I just don't see any point in buying the ETF. Somebody asked about Lockheed Martin getting close to the top of our buy zone. It's basically there, right? Does Biden dim that? I don't know why that would happen. Economy typically does better under a Democrat. So I don't really see any reason why things would be dimmer. I do think there's a short-term correction coming to the S&P though, because I think that, Trump's Treasury pulling the strings on the Fed, when you consider leverage, it's $1.5 trillion away from the Fed. That's a lot of money. That's a lot of money printer go burr that ain't going to be there to burr anymore. So I think in the very short term, the outgoing impact of the Trump administration could hurt Lockheed Martin, maybe gets it down to closer to 300. But I think that, the Democrats, like the Republicans, they all spend on the military. And I really just don't see military spending going away, especially with, Russia and China rattling sabers again. I don't know if you've been watching, but the Russians have been flying basically over Alaska. That's unheard of what they've been doing up in Alaska. They're breaking the barriers pretty frequently right now. And the Chinese are doing it to Taiwan and South Korea right now. So I don't see military spending going down. In fact, I see a lot more missile systems and airplanes being built and different types of technology to offset the second best stuff coming out of Russia and, second best stuff coming out of China. Really, Russia and China's technology truly doesn't hold a candle to ours. Where China has an advantage is that they are a lot more coordinated on their manufacturing. And I think that they have caught us in a lot of ways just because they do so much now. They're going to end up being the second biggest military in the world, and it's not going to take them very long, I don't think, 10 years maybe. The Russians, on the other hand, I see a big break coming for the Russians. I think the Russians are in for some pain over the next 4 years, and I think they know it. So, that means that maybe there'll be a conflict. Maybe Putin will feel compelled to find another little country to invade just to save face. So I don't see us not building tons and tons of weapons and then selling them to other people. And that's clearly one of the things that Trump talked about and did as much as, the difference was when we were selling weapons to the Saudis and everybody else 10 years ago, we didn't talk about it much. We didn't thump our chests. We just did it. So, whether you're Democrat or Republican, some of the sins are universal. And one of our sins is that we, want to make sure everybody's ready for a war. And I don't see anything hurting Lockheed Martin or Northrop or General Dynamics. In fact, I think that ETF, what is it? XDI maybe? What is the ETF? Let's look it up for you. XAR. I knew I was close. I really like this ETF, right? I like XER a lot. XAR jumped up a little bit here. I think that if you can get it on the dip down here, that's probably where we should get it. And I think this is a safer way for you to buy into the defense industry rather than buying Lockheed Martin or Northrop or General Dynamics. And I'm going to take all those off the list in January unless they've come down enough in price. I think that this is a great way to get those three companies plus a bunch of small and mid-cap companies in defense, which should do pretty well coming up. So when you do your little charty here, you say, okay, where's the range on this one? You notice I've gone from a lot of 5-year charts to 2-year charts. Maybe that's smart, maybe it's not. Remember, I've told you this might be low value commentary. And millennials have all traded me like freaking 5 times in the last couple of years. It's okay, I'm still kicking their ass at poker. Yeah, I don't even know if that's worth doing, but you take a look at this chart, and you say, well, there's awfully big buying pressure in here, right? So these folks on a pullback are going to want to lock in their profits, so they'll sell. I think you can see this get back to about 92-ish. And I think you probably want to buy there. So you say, okay, well, that's a zero line. So let's go with the zero line. And look, it's got a couple of good, I can't imagine it getting that low, but I guess it could. I think that's your range for the defense industry. Oops, gave me a different shape. I think that the optimal range, though, is probably the top of it. I saw another 618 line. There it is. I think the only way that it dips below that, right, that's a 618 retrace and an extension. That's a zero level. It's pretty powerful. You see where it got to that candle and then it retraced, then it fought through it again. I don't think that's a breakout, but I do think it's an indication that the lower end of this range is probably not coming back. But this area in here, I think you should be buying. And I would buy this instead of the stocks. I just think that's easier, unless you just are dying to own Lockheed Martin. I do think Lockheed Martin is the best in that batch because of all the different technology they have. So if you wanted to buy this fund and then Lockheed Martin, if it got near 300, I could see that. I probably won't buy Northrop or General Dynamics because they don't have the other technologies related to climate change and water that Lockheed Martin does. That's really the kicker with Lockheed Martin is the water technology and the climate change stuff. Do I still like Ford? No, I hate it now. I hate it. I hate Ford. I'm never going to buy Ford. Everybody should sell Ford. No, Ford's going to sell a bajillion cars, and they have great technology. They make robots. They can build the clone army if we ever want to go to war with the empire. Ford's fourth industrial revolution technology is off the charts good, along with Delta's, along with Lockheed Martin's. If you're going to research anything in industry, anything industrial, manufacturing based, you need to be reading the fourth industrial revolution stuff. Just put it into the internet. The internet knows about it. They heard. All right, let's call it a day. Everybody have a good gobble day. And tomorrow is the brand new webinar show, right? Brand new webinar show. We're going to do the cover call tomorrow. So for all you retirees or near retirees, 6-figure accounts and up, if you've got a 5-figure account, this webinar isn't for you, right? You're not selling options with a 5-figure account. You're selling options with 6- and 7-figure accounts because you want to generate more income and manage your risk. So the guy who trained me on options was a guy who helped write the Series 7 options part of the exam back in the 70s. So I know that part of the exam has changed a ton go to my blog and get all the details on the covered call. I'm really going to push this pretty hard. There's going to be about a dozen ideas every week, calls that you can sell, right? Buy the stock, sell the call, or if you already own the stock, sell the call. We're going to be looking at overbought and oversold signals. Oversold signals will sell cash secured puts to rebuild positions. But I am going to keep track of this portfolio using my dog. Stock Rover is going to keep track of this portfolio. I don't know how many of you have really looked at Stock Rover, but you can track a portfolio in here. So that's what we're going to use this to track a portfolio. But if you really want a ton of screening data, I'm telling you, I will put the link up for a discount for this because in the next week they're offering a huge discount. All right, everybody have a good Turkey Day if you're not coming back tomorrow.